Hello, Warriors. Hi, Hasselhoff. Bando's left. Hi, Kevin, FX Glenn, Zig. Everyone doing okay? Okay, so the dollar still doesn't look like it's done to me. Pretty good reading here. I'm not saying we can't have A, B, C before we make new highs, but this doesn't look like the end of it. I just want to take a quick look at the daily. Yeah, so still think there's some more confluence higher. 95 would be a possibility. I think Greg was talking about that before we get a break to new lows. So at this point, I wouldn't be fading dollar strength just yet. 4 hour. So here we go, at least up to maybe 94.50. As you can see, it's respecting this line. Tagged it again yesterday. So we'll see at least 94.22. Everyone see that? And Euro Pound was able, after the top yesterday in the recovery, made a new high. Momentum's even weaker. So, this could be 1, 2, 3. Maybe we get one more shot up. But to me, you have a piece on. If it, for some reason, tries to take this high out, I'd even sell more at 91.5 with, say, 92 stops. Because if it's going to work, I think we have to see it start to work now in this final push up in the dollar. And your cable is stabilized, not enough for me to want to get long. RSI is still negative. Really no divergence here. Maybe on this spike, this was a stop hunt, but not in a hurry to get short the dollar here. I think you have to stay with the dollar a bit longer. I was going to talk about something that got away from me last night. I tweeted about EuroCAD. So both EuroCAD and Euro-Aussie under some pressure. Euro-Aussie even weaker. And the reason I wanted to do it, especially with EuroCAD, is, Steve was all over the EuroCAD from the ending diagonal up here. Okay, so we've had a pretty nice retrace here, and I think we have at least 47.85. And I don't know if you could rule out that this is a 1 or an A, and this is going to be a failing rally in EuroCAD. I know that Greg is still positive Euro-Aussie, so maybe it's not the big move, but I still think we pulled back to 47.80. So there's still some pips in it. The problem is now was easier last night up here or yesterday afternoon than it is down here. So perhaps, some type of pop breaking this support in here. And, you're just wrong. You're wrong over 49.80. So even from here, it's not a big risk, but I think selling rallies could work for a few days. Hello, Yasser. Craig, Draghi will not deliver fresh policy message at Jackson. Okay. Did you call Mario? Glenn, were you on the line with him? Okay. Hi, John. So some of the yen crosses, we had a little bit of a rally in the guppy. I'd still like to see a little bit more. So maybe the yen will carry it. I still think it's a big short up here. Maybe this was it. But I'd much rather look at it at 44, some type of fib retrace on it from the big break. Let's take it from this high. And then I want to show you what's happening on the site. I don't know why it's not working. Anyway, I'd like to see it back here. You see this right here? So maybe a horizontal line. This would be ideal. Let's just go with this right here. Would love to see a rally back to 44. because I'm still long-term bearish guppy. And I wanted to show some Forex analytics stuff, and this is what gives me a little bit of pause on Euro Aussie. Nick has it possibly, you know, failing one more time here, and she caught this wave up here. But Grega has a pretty bullish count. He's shown it in here live before, but we're getting the pullback now in Euro Aussie, but he's looking for a new high up here. Could be as high as the 54, 55 range. That's 800 pips. So if Euro Aussie's going to do this, Euro CAD's not a position. It's just a trade. Everyone understand the difference between a position and a trade? This would be a trade. This would be a position. This would be counter trend. This would be continuation. Everyone with me on that? Okay. So I did this the other day and I got some good response from people, especially EuroCAD. Let me go back to it. I'm figuring back to possibly 750 here on the EuroCAD. Right here, back under 48. And then maybe with, if Greg is right about Euro Aussie, we're going to make another move. But this looks to me to be a bit weaker than Euro Aussie. So Nick caught this. She's respecting the divergence. I think someone else on Twitter told me Euro Aussie looked like a 3 drive to them. Maybe they were looking at this 1, 2, although one qualify, but it was a great idea. Does that help? Okay. So here we go. This is for you guys. We're going to take a vote. And this is for non-subscribers because subscribers can see everything at any time. So for non-subscribers, what instrument do you want me to share the team's view on? I need 2 people to say the same pair, and that's the winner. It's like nominating and then seconding. Okay, Hasselhoff has S&P. Okay, 1 vote for that, 1, okay. So far it's S&P. S&P and Dow are similar. So there's really 2 votes for indexes. Okay. But let's go with, I'll give you another minute. Okay, we had the choices. I have 2 euros. Okay, 2 euros. So that 2 euros will go to the euro. I think Greg is still negative on the euro, but you're going to get the view of everyone here. We'll start off with the weekly, which is done by Stel. You know, and he's showing this breakout at 115. We actually got up there. I think it's a natural for it to come back to 115. So, you know, I'll just give you, it would be classic. It would be more bullish if it didn't get back to the weekly breakout, 115, 116. But looking at the euro, just I think it's going to try and pop today, but all you have to do is say this is a descending triangle. Okay, let's call this a descending triangle with a horizontal line, say right here, right? Okay, so the high was 119, call it 1910. So call it 220. 220 from 117 gets you down to the breakout at 115, just a measured move, right? So all I'm talking about is a measured move, and I'll go back to it because I think that's Grega's preferred count is back down there. So we could rally maybe back to the 50-day, but this really kind of has the look of a descending triangle, which is a reversal formation. Everyone see that? So getting back to the team's view, this is a long term by Stell. Here's Grega, he showed it yesterday. See what Grega's looking for. 116.26 is equality of this, so a little higher than the breakout. This would, there's probably too many people waiting to buy a retest of the breakout. This actually makes more sense to me. Does everyone understand that, the market doesn't want to make it convenient and just pull right back to a number everyone's looking for? So when it stops above it, most people are still waiting to buy it down here, and it never happens, and then the next advance goes without them. Everyone there kind of understand what I'm talking about? Okay, so there's Grega. Here's Nick. I think she's talking about 1650. So she showed the 17 support just like Blake did, and we're trying to hold it here. Let's see her commentary. It's back tested the 23.6 and it broke above 1650 while it holds above the level. So it's now stuck between support and resistance, support at 1650. Okay. And then we get to the basic technical, which is Blake and Steve. And Blake has shown this the last couple days. He has a line like this in Euro Pound too. I think it's 90.50. So there's Blake, and I think Steve's going to have the same thing on the sticks. Maybe not. Yeah, same thing. So there you go, subscribers. So isn't it nice to have more than one method to look at? And then you look at some confluence between what Grega and Nick and breakdown levels for Blake, so that, right now people, even though Blake is correct in saying that the euro is strong, getting close to the top of the triangle, that's a favorite of Blake's. He has one of the best fundamental arguments for a higher Aussie Kiwi. He spent a half an hour one session talking about that if anything happened in China, that it's going to affect employment tonight. Okay, Brian. So I bet Blake covers that. And that the impact from China going into some type of, dip in their economy or some type of crisis with all the debt. People have been waiting for China to implode since a wall was built. So if that happens, more impact on New Zealand, than on Aussie. Although both are affected, Blake feels that New Zealand will take it harder. Okay. So, I talked probably, 2-3 minutes longer than I usually do. What do you think, Blake? I didn't lose my breath today. How are you, partner?
I'm doing fine.
Good. So, a lot of people talking about the Aussie Kiwi back at breakout level. And I know this is one that you have a, pretty strong macro view on fundamentally, and you only traded from the long side.
Yeah, the Aussie New Zealand, and unfortunately I'm not long right now. I was long earlier this week. I made a little bit, just nothing big. I think I bought it just below. I bought it just below. It was more of a scalp. I bought it like at 107.80 and sold it at like 95 or something like that. It was some intraday, like no, I just knew because it was bullish, and I think it actually, if I'm now that I'm thinking about it, I picked it up 2 days ago as we approached that trend line support. So when when you're looking at the Aussie New Zealand here, I'll take over.
Okay.
I'll take
I
over.
think you were on the road and you did it before the New Zealand Central Bank said something, and they
No,
no.
no, I'm talking about like 2 days ago. I bought it because we pivoted off of here,
Yeah.
and this is really big trend line support. You can see this big trend line support.
Yeah.
And I'm like,
Okay.
yeah, we're close enough, you know. And
Right.
I figured, you know, I'm not risking a whole lot. And then I was up like 10 or 15 pips, and I'm like, I'm just gonna pull the profit just because it was an intraday thing. It wasn't, you know,
Right.
I think I had updated. Remember, Steve's out of town, so I'm doing all the updates here, which he's going to be covering for me next week. Where is the Aussie New Zealand? Okay, and I'm on harmonics. Let's go over to basic technical analysis. So we were right around that trend line support, and you know, ahead of the RBA meeting minutes, the Aussie New Zealand is trading heavy. We're nearing the uptrend line, which comes in at 107.25, and it was down here.
50.
And
oh yeah,
well, it was down here, and I was like, okay, well, I'll just pick it up. And so I'll pick it up now. It's by that support. And then, you know, I was up a few pips, and then I just turned around and sold it. Because you know, as it is in a cup and handle pattern, the risk is for an upside break. Now we do have, since you mentioned I'd talk about it, I'll just talk about it now. We do have employment out of Australia tonight, but we also have producer prices out of New Zealand. So we have, you know, this dynamic where if inflation and producer prices are expected to actually improve in New Zealand tonight. So if we have, you know, let's say the PPI come in a little weaker, and then Australian employment continues to impress, which Australian employment, if you go back and look at it, you know, over the last few months, well, last month the headline number came in just around in line, but I think it was a full-time jobs that really, you know, made the Aussie bounce. But even the headline numbers for the previous like 4 months had come in better than expected. And the Aussie's always done a little bit better, or at least has in recent months. So if Australian employment comes in stronger, let's hope New Zealand employment or producer prices come in a little weaker, we could actually get a move up here, you know, towards 109 and maybe towards triangle resistance. Because if you look at the longer term, this is like a weekly view, but it gives you a really good understanding of how consolidated this Aussie New Zealand is. You know, we start breaking above 109.50, 110, which is far from where we're at. But and I'm not, just so you guys know, I'm not going to go in today long Aussie New Zealand. I'm not. If I would have been a little bit more patient, and I would have taken you know, taken the Aussie New Zealand earlier this week and just kind of stayed in it, and I was in a nice position, like, you know, still long at like 107.75 or wherever I was long, or 107.80, and I was up 50 pips right now, I would probably hold it going into the data. But I'm not going to take a position and then only be up 10 pips or down 10 pips and then, you know, hope the data works out in my favor. I don't like to take on that type of risk, especially when you have, you know, double the data coming in. It's not my cup of tea, but we do have, you know, it's a nice cup and handle pattern, a break above these highs, which could even happen before, but a break above these highs should target this 109.50. And then, you know, then we have, you know, obviously very, very critical resistance as we start making our way up higher in the event that it does. So, so overall, I mean, I think the structure of the Aussie New Zealand looks bullish. Again, I'm not long. I wish I was. I wish I would have just kind of stuck with it, because during the day I do a lot of intraday trading. You know, I'll scalp a lot. Like last night, I shorted the euro at 117.40, and then I put in a bid at 117.25, 21, and I got hit overnight. Just I was willing to take, just small positions, just taking little bits and pieces, because I think the euro is trading really heavy. Now, when one of yours or one of our listeners said the ECB will not deliver that new policy. Well, that was the news that happened overnight. So ECB Draghi will not deliver fresh policy steer at Jackson Hole. That comes from the sources, and that was important because you can see how the euro reacted when that came out. The euro just got absolutely blasted. Now we are really still pivoting on support here, and the only way we're going to break through this low, in my opinion, is going to be after the monetary policy minutes that come out today. So if we see
there are Fed minutes.
Yes, we do have Fed minutes today. We have meeting minutes. So remember, it's a look in the rearview mirror,
right,
from a couple weeks ago, from the monetary policy meeting a couple of weeks ago. But the meeting minutes, if the Fed governors are still pretty hawkish, and we get a look behind the scenes, and it seems like that they're still on track to deliver another one, if not two, rate hikes by the end of the year, or if anybody even gets comes to that conclusion that we might get the possibility of having two rate hikes going into the end of the year, then the dollar may rally, and we might actually see the euro push through these lows. Now,
yeah, that's not in the market, Blake, too.
No,
right.
No, it's not. No, it's not. Sorry, I was just getting a drink of my coffee. Hey.
Hi, everybody. If I may add, Fed fund futures have moved quite a bit in the last couple of weeks, and we're pricing just over one hike by the end of next year. So if what you say, Blake, happens, I think the dollar is going to move quite violently higher.
Absolutely. I mean, I think, and actually, I saw it on, I saw it that Fed funds futures actually had, for the very first time, a 0.2% or 2% chance of a rate cut by the end of this year, earlier this week. Now, that means that, some analysts and economists are forecasting a very dovish Fed. That's what that means. And so if we come away with today's meeting minutes saying, thinking the opposite, that, hey man, the Fed still seems like they're on track to continue to be pretty firm with monetary policy, and they're still looking to tighten at some point, we get an aggressive move in the dollar. Now, I still believe, and Stelios, you can add to this too if you want, I still believe the Fed is not going to raise rates by the end of the year. I think that they're done, but it doesn't matter what I think. But I do believe that is the case, and I still believe that other central banks are going to be looking to tighten monetary policy in the future. So I think that any dip in the euro dollar should be bought, especially if we get a dip like this. If we get a dip down to 1.16 in the next 48 hours, I think that's going to be bought down there. But it doesn't matter what I think. If the market walks away today thinking that the Fed is a little bit more hawkish than they thought, we could get a dip down to that trend line support, and that might give us an opportunity to buy the euro at a cheaper price.
I like that.
I mean, again, that's just my thought process, and I actually hope that happens. I hope it happens. I hope we see a little bit of a move lower. I'd like to see the dollar bounce. You pointed out the dollar earlier, and this is what the dollar index, in my opinion, looks like. We have a quite possibly a bear flag pattern, and we're still holding below, or we're right at 94. We're right at 94. But if we get above 94, we start squeezing like towards 94.50, we could get a bit of a short squeeze in the dollar index. And I welcome that. I hope it happens. I'd like to sell the dollar at a higher price. I've been bearish the dollar all year. I think that any type of bounce should be sold. Doesn't mean you have to sell it today. I mean, I'm talking over the course of the next week or two. If the dollar can bounce towards 90, 95, 95.50, 96, that's going to be a great opportunity to sell dollars and buy buy the euro, or if you're not buy the euro, buy the cable, or do something.
That 97 level was a big level once it took it out. So 96, it shouldn't get to 97. A lot of people that are looking for a bear market rally were looking for 97, but at least it shouldn't close above 97 or so. So up in that area, you'll have good risk reward to be short dollar. I agree with you, buddy.
Yeah, I mean, it'd be great, but just because I hope that happens, doesn't mean that it's gonna happen. You know what I
say about hope, Blake? Hope is the oxygen in our life and the carbon dioxide in our trading.
There you go. We have data coming out in just a few minutes. By the way, we have building permits and housing starts, and we have the Canadian foreign securities purchases, which is like tick data here in the U.S. For Canada. And by the way, the Canadian has really come off this. It's still building this cup and handle pattern, but we've come off this this key resistance yesterday at 127.60. There was some resistance right up here at 127.75. So we really need to break above 80 to get the dollar Canadian moving again. But I'm actually still long the dollar Canadian. It's pulling back a little bit off of this resistance, but I'm still long a position. But I'm really, hoping for the dollar to continue to power higher, and then that'll affect the Canadian somewhat as well. But we do have, like I said, we do have some housing data coming out. Shouldn't be too big of a mover, but it obviously can move the market. The Aussie, I've been surprised actually. The Aussie recovered after slumping below this 78.40. We came back and we've rallied back above it. I'm surprised how resilient the Aussie is. I figured I would have got up this morning, and I don't have any Aussie exposure. Just so you guys know, I thought I would have got up this morning and the Aussie would have been trading down towards 77, like 50 or closer to this support down here. And I got up this morning, I'm like, wow, we're back above 78.40. I was quite impressed with the performance of the Aussie dollar, but I think a lot of that has to do with the Aussie New Zealand that looks pretty bullish. One other thing, we have again, we have data coming out here. The US dollar Japanese yen, we're going to watch it going into this data here in the next minute, but the US dollar Japanese yen has been very resilient. I was talking to probably one of the biggest FX traders I know. I mean, when I say biggest FX traders I know, he will buy and sell 10, 20, 30 million of a currency at once. He takes huge positions. When most traders that we talk to here, retail type of traders, they might trade 10,000 to 100,000 worth of a currency. Yeah, he's trading 10, 20, 30 million of a currency at any given time. And he was like, yeah, I think a lot of people got caught on this break below 109.50, and they got caught short, shorting through here. And I'm like, yeah, it looked really bearish at the time, and it looked like we were going to break down and trade much lower. And we've actually reversed quite aggressively. And he was saying, I think above 111 and things could really start squeezing. So if you guys are looking for dollar strength really above this 111, might create more buying interest in the dollar yen, and it could end up giving us some buying interest in the dollar all the way around. So I don't think that's going to happen right now. I just think that we need to keep an eye on that going into the FOMC meeting minutes in a bit. So, or in a few hours. So that's just a little heads up. So here we go. We got data coming out just in a few seconds. Okay, the dollar yen's weakening, so it's a little weaker. Let's see. I mean, we got, okay, so here goes the euro dollar. The euro is actually getting a boost right now. So here goes the euro. Euro traded up a little bit. Yeah, I mean, building permits are horrible. They came in at 1.2 versus 1.22 versus 1.25, which is not good.
Michael, Blake showed the pound Aussie yesterday. Did it break down today? So Michael's saying pound crosses look weak, but
yeah, I haven't looked at them yet. I'll look at them here in a few minutes.
Okay. I'm just
trying to pay attention to the dollar at this moment. Let's see, bonds probably rallied a bit, and bonds ticked up just a hair. See, the dollar yen spiked down and then right back up again. I mean, I think we're gonna have to wait for the
minutes.
Yeah. I mean, we're just and also keep in mind, guys, we're in the last stretch for the summer. The last couple of weeks, and there's just not a lot of market participants out there. So, the liquidity is pretty poor. Typically, we probably would have got a bigger reaction dollar-wise for this, but there's just not a lot of people out there, buying and selling. So,
Where are you going to in the Midwest, Blake? What part of the country?
Well, I'm going to Nebraska. What happened is my aunt, she's moving back to be with she just retired, and she's moving back to be with her girls in Des Moines, Iowa, and because she just has girls, and their husbands can't get away to help her move. I'm like, you know what? I'll fly out there. I haven't seen you in a couple of years. I'll fly out there and help you. And then my dad's like, well, I'll do it too. So, my dad and I are actually going out there.
That's a family.
And then we're helping. And then after that, we're going on a road trip throughout Iowa to visit a bunch of relatives that I haven't seen in many years. So,
well, I'm looking forward to your crop inspection reports when you get back. I'm an old grain trader, so I went to school in DeKalb, Illinois, so I want to know how tall the corn looks, buddy.
Okay, I'll let you know, but it doesn't matter what I say, because I'm like, yeah, the crops look pretty good. They could probably be the worst.
Soybean, they all grow out of the ground. That's all I know too. So.
Yeah, that's pretty much what happens here too. Hey, one of the other currency pairs that we should pay really close attention is we should really pay attention to the dollar Swiss. This dollar Swiss, in the event that the dollar rallies, the dollar Swiss has held up remarkably well. Steve makes a great point. He's not here to defend his point right now, so I'll defend it for him. He makes a great point that he thinks that the dynamics are shifting, where people don't want to pay the interest rate differential to hold Swiss francs right now, because it is expensive to hold Swiss francs with a negative interest rate. And he makes a good argument. So if the dollar does strengthen and we get a recovery, the dollar Swiss could be one of those that really attempts to break higher. Do I think the dollar Swiss is going to 110? Not necessarily, but can we squeeze up to a parity again? Sure. I mean, if the euro dollar pulls back to 116, 116, the dollar Swiss could make its way up to 99 cents, maybe a parity again. So I think this one, and plus technically we've got this nice little inverted head and shoulder pattern. I mean, it's not perfect and it's not symmetrical, but this is showing you the resilience right now of the dollar Swiss, and how adamant the buyers are at the moment. So I think we should keep an eye on it. I think the dollar Swiss has the potential. You know, we get above this trend line right here. Okay, we get above this trend line right here, above like this 98-cent level, and it's probably going to squeeze a little bit. And that coincides with the euro dollar if the euro dollar breaks down, and that might even be, you know, the better trade where you go, okay, well, I don't want to short the euro, you know, because I actually really want to buy the euro at some point. Maybe, you know, you don't play the euro to the long or to the short side. You play the dollar Swiss to the long side as an alternate. You know,
yeah, because it has been, buddy. I mean, you've had a 300 pip move up in U.S. dollar Swiss and a 200 pip down move in euro. And I think it turned a day or so before the euro. So, Steve, you're right. Steve was on top of it.
Yeah, exactly. No, I know you mentioned the pound crosses. First of all, I'm short the euro pound again. I got short yesterday. I'm still short. I'm going to get more aggressive on a break below 90.50. You know, as you can imagine, there's just the structural setup. Actually, I'll probably get a little bit more aggressive here. I'm preemptively shorting this. You know, technically, you know, the safe way to trade this is not anticipating the move.
Right.
The
safe way for 90.50, right?
Yeah, 90.50, 90.65. You can start, you know, nibbling on it down here and then get a little bit more aggressive below here. That's the safer way to trade it. I like to tell people, look, I've been doing this for a long time, you know, so I anticipate things more than the average person, and that's, you know, due to there's a couple reasons that's why I do that. I'm having a great month this month, you know, monetarily, so I can afford the opportunity myself to take some preemptive strikes in the market. In other words, you know, take some early moves if I feel that something's going to move. I look at it from a, you know, not only a technical structure standpoint, but you know, I look at it from cross rates, you know, macro standpoint. There's a lot of different things that factor into why I'm doing whatever I'm doing. If you're just a technical trader and you're not, you know, you don't have a in-depth understanding of the FX market, then, you know, the safe way is just to wait till it breaks, because there's going to be plenty of money to be made when it breaks down. But I'm trying to catch a little bit of the early move. And again, if I was having a bad month, if I was down this month and I'm like, you know, the last thing I'm going to do is take a preemptive strike in the market, because in the event that I'm wrong, I'm just going to put myself deeper in the hole. So again, a lot of what I do tends to be, you know, how good I have been trading for the quarter, for the month, and you know, but that's how I gauge. That's how I personally gauge things, because I get paid on a quarterly basis. It's not, you know, and so that's when I know that I'm in a position to do so. If you're somebody who, you might be in a different situation where you're like, okay, well, I'm having a horrible month and I just can't get ahead this month. Well, the thing you probably don't want to do is try to get in early, because most of the times when you try to get in early, you're probably going to be wrong. So, again, these are things that I do that doesn't necessarily make sense for everybody. But again, the euro pound, this is one of those that I think is going to be probably a really nice setup. Let's see. We talked about the dollar yen. Dollar yen's up against some pretty key resistance. If you guys use ForexAnalytix, there was just a recent update on ForexAnalytix, but notice on the euro yen. But notice we back tested this trend line.
Yeah, nice.
Perfectly overnight. Here, let's get rid of this one. We back tested this trend line perfectly overnight. This is the
ascending wedge breakdown
point.
Yeah, nice.
So yeah, so this is a really key rejection here.
Right.
Pound yen, I haven't shorted this one again. I took a loss on it 2 nights ago. two nights ago, I think it was.
Well, if Euro pound works to the downside, Blake, you might have better entry on the guppy.
Yeah, I mean, if the euro pound works, then that means the pound's going to be a little bit. I have a hard time being short like the pound and then long the pound on cross rates. It's
yeah, I know what you mean.
It feels a little awkward, so I'm not doing that currently. But
yeah, it's like having two 45-pound plates on the bench and one on the other side.
Right. Right, exactly. Oh, I'm sorry. I was going to cover the pound crosses. So yeah, the pound yen or a pound Aussie is actually dropping through support, and again, this is where we saw the Aussie strength. And I did not play this to the long side yesterday. I thought about it, but fortunately my attention got carried elsewhere. I ended up. I don't think I would have traded this long or stuck with it if it didn't immediately bounce. But it is starting to break lower there. Pound New Zealand, very choppy. I can probably get rid of this. This is we're stuck in no man's land in the pound New Zealand. Pound Canadian, not a whole lot to do here. I'm not excited about anything that I see here. So yeah, the pound Aussie is starting to break lower a little bit, and I think a lot of that has to do with the Aussie, how strong it looks against the Aussie New Zealand. You probably had the Euro Aussie that rolled over pretty aggressively. Yeah, the Euro Aussie rolled over pretty aggressively. And by the way, the Euro Aussie, in my opinion, it has to break, 151. We break 151 to the upside, I'm bullish. And until then, very, very tricky to be long here. Very tricky. Risk reward does not favor longs. Risk reward favors shorts. Doesn't mean
although Nick caught that wave up on a pip last week. Caught the rally, got out good.
Yeah, I mean, but at this point, when you're up against this major multi-year trend line, it doesn't it favors shorts right now.
Right.
Period.
Yeah.
And this is one of those that I don't really want to anticipate because I'm actually pretty bullish the Aussie New Zealand right now, and even though I'm not long, I think the Aussie looks like it could, be pretty firm. So I have a difficult time shorting the Aussie as a result. Like I'm not like super excited about shorting the Aussie yen at the moment. It's like, okay, yeah, the Aussie yen, we had this false breakout over here. We had to bounce off the 50% retracement. I just don't really want to short it at this moment. Again, it's because I see how the Aussie's acting against other things. Grega yesterday, and I want to talk about this for a second. Okay, Grega, he mentioned this yesterday, and he's not the only person I've seen mention this. This is why I'm going to talk about it. And you and I talked about this yesterday, or not yesterday, but a couple of days ago, Dale. And I'm gonna set the record straight on my thought process here. Okay. And I'm not here to discount anybody else's analysis. I'm just going to tell you what I do. Inverted head and shoulder patterns and head and shoulder patterns are reversal patterns. Okay, that's how I trade them. I trade them only as reversal patterns, and they're not continuation patterns. Not in my book. Not by technical analysis of stock trends, McGee and.
Oh, you read the Edwards and McGee. Wow. I
have it.
That's the first book I read at the Merck.
That would be the third book I read, and I think I've still got, my series is like my edition is, I think, like the maybe fourth or fifth edition. I've had it for my entire trading career. Yeah, it's the Bible, and it's you still go out and buy it today. It's going to cost you 70, 80, 90 bucks or so, just to get a used copy. But head and shoulder patterns are reversal patterns by the book. I've seen a lot of people trade them as continuation patterns. I don't. And Greg mentioned this yesterday, but he, like I said, he was not the only one. And then you and I had this conversation a couple of days ago.
Yeah.
I see it. I'm not ignorant to it, but what really has always helped me in the past is if I can't see an arm to complete, I will not trade it. So that, in other words, we had to have gone way up here, come way down here, so I can see the distance. There's a, you know, two arms, you know, I can see another, I can see where we're going, meaning that we go to, it's a recovery to where we've already been. And if I can't see that, if I can't see this arm over here, this one on this left side, I won't do it. Period, end of story. Again, that's how I trade. It doesn't necessarily, what I'm very clear on what I do is not the Bible. And what I do is not, I don't say, I'll never tell you what I do is the right way. And, you know, it's just, there's a million ways to trade the market. I'm just telling you what I do personally, okay? Meaning I won't trade this as a continuation pattern. I see what everybody's talking about, but what I found is over time, I think what you'll find out is that these will not produce the same upside. They won't produce the same upside, and you'll wonder why your targets never get hit, is because you're going to find out that they don't work as well as continuation patterns, in my opinion, if I had to give you my opinion. But there's a lot of people looking at this right now, which, you know, if you got the whole herd looking at the same thing, you're probably going to get a reaction if we break above this, especially if we break above this trend line here, this, or what, you know, people are viewing as a neckline. If you break above that, we probably get a reaction. We might even take us to all-time highs here in the S&P. So that's I just wanted to talk about that because Greg mentioned it yesterday. I didn't want to you know, step on his analysis. I'm just telling you how I trade things, and so that's it. Okay, so there's the S&P, and I don't know if Stelios is here. I wonder if he's got any comments or things he's looking at, because I know he Stelios, are you around?
I am here, yes.
Hey, I wanted to ask you, you've become bearish on the euro pound yes. From a macro standpoint. Can you tell us why? Can you give us the reasons why? Because it goes along with what I'm doing. So.
Sure. Yeah, it's something that I've been looking at for some time, and the thing I always think about when it comes to the UK is the situation of the UK economy so terrible that it requires, you know, 0.25% base rate and QE and everything that's happening? I understand that the whole Brexit thing is out there, and there's no, you know, there's a lot of uncertainty, obviously, associated to that. But if you look at economic data, it's not bad. You know, the one thing that everybody always criticized for the last year or so was the disparity between real inflation and wage inflation. So real wage inflation has been negative. Now this is even tightening and going, you know, the other way. To today's numbers were very good. Yeah. So this, I think the MPC have, the Bank of England, they have talked about this, that this is a problem, and it seems to be, in my opinion, their number one problem. Well, if this problem is slowly going away, and inflation is still at decent levels, you know, still above 2%, growth is not stellar, but it's stable. Unemployment for nearly all-time lows. I think we're at 40-year lows. It's not, you know, the UK economy is not collapsing like people would think it is. Sure, there's a lot of uncertainty, but I don't think we need to be in such a loose economic monetary policy. I think that the cut of last year, of August last year, should be reversed as soon as possible. And then we see, you know, because people talk about, oh, you know, it's not the time to be raising rates because this and that. Yes, this is all valid if rates were at, say, 2%, but they're not. There are these levels which are extreme, and they're only supposed to be temporary measures. And I think that's a mistake that most central banks have made, like the Fed as well. The Fed is slowly getting out of this, but they've made this mistake. They've used this tool for way too long. And, you know, we've had all these discussions before where I think that these measures are, in fact, deflationary if used long term. So I am, you know, I'd like to think, or I think that the Bank of England should be raising rates at least to reverse the August cut as soon as possible. You know, by the November inflation, the next inflation report, which is in November, I think they should do it.
So where's the Brexit multi-year negotiations fall into place? And Stelios, you're one of the smartest guys I know. So this is and that's why you have such a good handle on the macro view of the markets, because it's a thinking man and woman's game. But where does that fall in line with what's happening with Brexit?
Well, the Brexit negotiations, as we all know, have started. Nothing has come out of them. It's very early yet. What I always try to look at is what is the big picture of it, what is the market pricing in, and what do I think is the most likely outcome. So the market straight away punished the pound massively after the referendum result, probably for good reason, and it's pricing in a very tough Brexit process with no major deals between the UK and the EU, because they make an argument is if the UK leaves the EU and they strike some kind of a nice deal, then a lot of other countries are going to say, yeah, screw that, we're going to go out as well, and and get something equally good. So the EU, they want to have a good deal with the UK, but they don't want to show that they're losing the negotiation battle. So it's very tricky, I think, and I don't know how exactly it's going to come out. But at the end of the day, I think that what's priced into the UK is a bit extreme versus what I think is going to happen. So it's going to take 2 years for negotiations to really start yielding results and see exactly where we stand. But I just think it's just one-sided at the moment, and it's just a gut feeling I have, and just putting everything into the equation, I think it's just gone a bit too far.
Okay, but Mark Carney's been pretty dovish, hasn't he, in recent months?
Yes.
So he's taken the very dovish stance, kind of like almost as
like Draghi,
like Draghi or even yeah. I mean, so what? I mean, do you think Mark Carney? Do you think if he changes his tune, that's what will move the pound higher ultimately?
He won't do that, guys, until he unloads his real estate portfolio in the UK.
Yeah.
Right, Ash?
Well, Carney is a bit of a mystery. It's weird because the central bank heads of all the major central banks are dovish. And like Draghi and Yellen, she's on the dovish side compared to others. But I think in the Bank of England, things are changing. I've talked about this before. I blogged about it. We had 5-3, 2 meetings ago. Okay, one of the hawks left, but I think this is changing. And Mark Carney, okay, he has influence, but he's one person in the Bank of England, and I think that he also, at some point, he will look back and he will say, okay, is this monetary policy really needed for so long? He did what he had to do. He can claim that he saved the UK from collapse or whatever, following the Brexit vote. There's been a lot of stability. There's been some political turmoil because of the elections, all that, but overall, things have gone pretty steadily. So he can say, yeah, I did what I had to do. Things look okay. So now we go on the other side and we start removing a little bit of accommodative policy. I mean, I don't know Mark, obviously, and he's a dove, but I think that he eventually will also start turning around. Maybe he won't vote for a hike, but he doesn't have to. That's the thing. So
yeah, interesting.
I mean, I don't know.
Well. I mean, again, I hope you're right. But that's just for today. Tomorrow, I might hope you're wrong. I might actually be short the pound. But it's good to hear your views, Stelios. Thank you very much. We got a question a comment from Art. He says Carney's housing allowances. Oh wait, no. Art says, Stelios, I'm a UK property investor. Believe me that the market cannot bear a rate increase yet.
Yeah.
Why is it that fragile? I thought it was skyrocketing.
Well, the thing is, yes, the UK market is, the housing market is quite leveraged. I know a lot of people. I used to live in the UK for years, and a lot of people, my brother, everybody, they've got these huge mortgages. Yes, but do we really think that quarter of a basis point or half a basis point of rate hikes is going to make the market collapse? I don't think so. The reason why the market might collapse is not rates, unless rates go to like 3 or 4%. The reason that the UK market, and obviously London market especially, has skyrocketed was the inflow of foreign money. That's what it was. I'll give you an example. My brother lives in this really nice development in Chelsea, and there are, I think, 100 flats or something like that. I think over half of them are empty because they were bought by, I can see it, there are no lights ever. So they're bought by Chinese, Russians, Greeks, whoever, who just park their money there. And that at some point is going to reverse, because a safe haven in terms of real estate will not be a safe haven forever. Or people might say, this has gone way too far, let's take some profits. So I think that's what's going to move the UK housing market, not 0.5% or 1% in rates. My humble opinion.
And it's it's really interesting. We've rates have gone up a little bit here in the U.S. And like the housing market, I live in Arizona, which happens to be one of the hotter housing markets in the U.S. And house prices have cooled. It's definitely like flattened out.
Did we take out the 08 highs, 07, 08 highs in Arizona?
No, we came pretty damn close,
Okay, I was curious about that.
Yeah, and then you look at Florida. Florida's come nowhere close, and neither has San Diego. From what
I think San Diego took out the highs, Blake. Are you sure
really?
they? Yeah.
I don't know. Maybe they did, but we've gone pretty damn close. But anyway, I don't think, and I would agree with you. I don't think that a nominal hike or tightening of monetary policy is going to do much to real estate, because we haven't seen that here in the U.S. We will. I think we will too, but it hasn't collapsed the market.
No, it's going to take a bear market in the bonds.
And also we have to remember that the London housing market drives the UK in a big way, and a lot of the properties are have been bought with very low mortgages, because of the inflow of outside money, or no mortgage at all, so it's, I think 0.5% or even 1% is not going to make a huge difference. My personal opinion.
You're right. Hey, just really quick, technical analysis of stock trends by Edwards and McGee. There's 10th edition. Peter had asked what was the name of the book, and I don't know what the cover of mine looked like. It's a hardback, so my cover's long gone. I can't remember what it is, but which one it was. I have to go back and look at it, which it's not in my office right now. It's up in my library. So, but anyway. Dale, I know you have an interview coming in. I'm gonna flip it back over to you.
Okay, buddy.
And Stelios, I really appreciate your comments today. And again, monetary meeting. Keep an eye on the Swissy. I think the Swissy and the Euro. Those are the ones we're really close to some pretty key resistance levels. In the Swissy, we're pretty close to support in the Euro. I think those are the ones to keep an eye on today, and really the dollar yen as well. The dollar yen's not too far off that 111, so the dollar's holding up relatively well after that news. So.
Okay, well, thank you, Blake, for hanging out with me so long today, and Stelios, thank you, and remember not to just count your pips, but count your blessings, and subscribe to ForexAnalytix so you have the whole team on your side in the middle of the night when you're brainstorming and you can't sleep. Thank you, George. I recognize your name. Okay, everybody, that's going to be a wrap. Good hunting. Thank you, Martin. See everyone tomorrow. See you tomorrow. Talk to you later. You're welcome, Hardy. Nice trading this week. Kevin, if you could hear me, send me a message on Twitter in the next few days and we'll look for another day. Thank you, Kevin. Take it easy, my trading warrior brothers and sisters. See you tomorrow. Good luck with the Fed minutes. Thank you, Humberto. Adios, guys.